JB HiFi announces a slump in its profit and its share price surges. New arrangements mean the US or UK could pull out of AUKUS with a year's notice, and the new deputy boss of the Reserve Bank has a crack at economists. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Tuesday, the 13th of August, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, we've got a bit of exciting news coming up a little bit later on, but on with the news to begin with. The main story this morning, JB HiFi shareholders are happy today after the country's best regarded retailer announced a big special dividend and its share price jumped 10%. But perhaps the underlying result isn't quite as golden, with reference to JB's signature colour, which is more, I suppose, more yellow, really, wasn't it? So it's a bit of a stretch.
No, I like it. No, I like golden. We'll go with it. Well, yes to all that you've just said. JB HiFi was the first major retailer to report full-year results, and its better-than-expected result, underlying profit for the full year was $439 million, pushed its share price sharply higher. Helping out was the special 80-cent a share dividend. But the result was down 16% on last year, and total revenue was lower, so too were gross margins, demonstrating that it ain't all good news for retailers, thanks to cost of living pressures and higher interest rates. This is a case of the result being much better than expected, or at least a bit better than expected, but those expectations had been beaten down in recent months. JB is a really important result. It isn't that big a company, actually. It ranks 65 among the top 200 with a market cap of just under $8 billion, but it is considered the best-run retailer in the country. So, if it can't make money, then what hope do the others have? Or something like that. That's why the slide in revenue and earnings is worth noting. The group will pay a smaller final dividend, but a whopping special dividend. That's significant too, because if JB thought it would be able to keep up paying higher dividends into the future, then its final dividend would not have gone backwards.
And JB HiFi also said, Sean, that it's branching out beyond its business-to-consumer model.
Yeah, it's purchased something called ENS Trading, which has 10 showrooms in Victoria and another in Canberra. It paid almost $50 million for 75% of the business, with an option to take out the remainder in 2029, and it gives the company entry into the lucrative market for commercial builders. JB HiFi Chief Executive Terry Smart said it provided exposure to the premium home appliance customers, the bathroom category, and large commercial construction customers, as well as to boutique builders and architects. What's interesting is that JB HiFi's result boosted other discretionary retail stocks like Harvey Norman and Super Retail. It's going to be really interesting to see if those stocks can hold on to the gains over the next few weeks when they report, whether they're seeing their margins squeezed, whether they're seeing their revenue go backwards. It's just that the expectations had been beaten down so much that JB's result triggered the share price surged, but you just wonder whether it ain't just that golden underneath it all.
Yeah, all the headlines were really about JB HiFi in the last 24 hours, but more broadly, how did local markets perform yesterday?
The S&P ASX 200 finished up 0.5% to 7,814 points, with information technology and consumer discretionary stocks doing best. The former reflects what happened on Wall Street over the weekend. The latter reflects the confidence the JB HiFi result instilled in investors. WiseTech Global was the best of the large caps, ending up 2.5%, but it had plenty of friends: National Australia Bank, ANZ, Wesfarmers, Macquarie, Goodman Group, Aristocrat Leisure and QBE, Suncorp as well. They all closed up more than 1%. Rio Tinto, Fortescue Metals and REA were among the worst performers of the large caps. Beach Energy's share price fell 12%, worst on the day, after it downgraded reserves at a field in Victoria that started up only 2 months ago. Tabcorp was best on the day, up more than 10%.
You've got an interview coming up after the show with Nicola Powell from Domain, which is reporting later in the week, which isn't really relevant to the chat, but just thought I'd drop that little nugget in there for you, Sean.
Thank you. Excellent. Yes, I talked to Nicola all about what's happening in the housing market, obviously, but what's really interesting is they do a deep dive into the different cities and the regions about how long it takes to sell a property. And what's really interesting is the time taken to sell a property is expanding, and by inference, that suggests that the upcoming selling season, the upcoming spring selling season, may indeed be a better one for buyers. Last couple have been great for sellers, not so much buyers. Perhaps that's changing. We talked to Nicola about that.
Yeah, it is a really interesting conversation, and Nicola is great to talk to. She's coming up after the show, so stick around. International markets, what's happening?
Oil was high yesterday following last week's first weekly gain since early July. The market really is still waiting, though, for Iran's response to last month's assassination of a Hamas leader in Tehran. Gold steady, just under $24.40 an ounce. Iron ore's up a bit, trading just above $100 a tonne. And the Aussie dollar is buying just under 66 US cents.
Sean, got a bit of exciting news to announce here.
Very exciting. Yes, go on.
We are thrilled to announce, really hyping this up here, aren't I? That our Mia mugs have arrived.
Finally. We've been promising them, for 4 years?
Yeah, a very, very long time. And they have finally arrived. The Mia, MEA. The Mia is the most enthusiastic advocate. It is a terrible acronym that we came up with one day on the show, just on the fly, and somehow it stuck. The Mia, the most enthusiastic advocate. It is a limited edition, very rare, collectible mug with fear and greed emblazoned upon it. And the best part is, Sean, that we are giving them away to listeners who are the most enthusiastic advocates of fear and greed. So if you are telling your colleagues about us, then let us know. Post about fear and greed on LinkedIn or on Instagram or Facebook. Make sure to tag us. We are on the lookout for Mia's, for most enthusiastic advocates, to receive the limited edition collectible Mia mug. What a prize, Sean.
People are rushing to their phones right now, I'm sure. In fact, we do have a few that we need to already send out, because there have been people over the years who have been very good to us. And one of those people, I've got to say, is EY Chief Economist Sherelle Murphy. She's been on the show a bit. She's been a fan for a long time, and she's always recommending us to people. So I think Sherelle might be, one of the very first mail outs, I think.
You are so going to go rogue with this and just send them out to everyone. It's going to be the new currency.
Another woman who's been a very big fan, my mother. Absolutely. She gets two. Something like that.
Yeah. These are getting increasingly rare and increasingly collectible, because you're just going to pass them out to everyone. Anyway, post online, LinkedIn, Facebook, Fear and Greed. Send us an email via fearandgreed.com.au. Let us know what you're doing to spread the word about Fear and Greed, and you may be the recipient of the limited edition Mia mug. Let's get back on track, Sean. We'll be back in a moment with the rest of the day's business news. Sean, the US or the UK could pull out of the AUKUS submarine deal with just a year's notice if either nation decides the pact weakens their own nuclear submarine programs. This is according to new documents that have just been revealed.
An updated AUKUS agreement and a political understanding between the countries tabled in Parliament yesterday established a 50-year legal framework for the transfer of nuclear materials and equipment to Australia. The understanding says that the US and UK should not unreasonably withhold nuclear information or equipment from Australia. This is according to a report in The Australian. But it includes an escape clause for either country if they decide the AUKUS deal adversely affects their ability to meet their respective military requirements and to not degrade their respective naval nuclear propulsion programs. It's an out. The new agreement and additional political commitments were revealed by Joe Biden last Thursday in a letter to the US Congress, but their contents were only disclosed yesterday morning when they were tabled here. Now, on Friday, the Prime Minister, Anthony Albanese, downplayed any changes, but there is no doubt, when you read it, that the US and UK can pull out within a year if they want to.
The ACCC has delayed greenlighting the merger of Chemist Warehouse and Sigma Healthcare. It needs more time to decide on the impact the deal would have on smaller pharmacies.
It's the biggest merger deal of the year, worth almost $9 billion. It would create a listed pharmaceutical retailing and wholesaling giant. The competition watchdog had originally expected to decide whether to approve the deal next month. Now, it's already raised 5 orange flags in a preliminary assessment of the deal. If it goes ahead, the new company makes Chemist Warehouse, so it wholesales and retails drugs. So it would sell as a wholesaler to retailers, obviously, to its own shops, but also to competitors to its own shops. And that's really what has worried the ACCC. According to media reports, the decision to delay the decision is due to difficulty in assessing the impact of the deal on a network of pharmacies by suburb.
The relatively new Deputy Governor of the Reserve Bank, Andrew Hauser, has labelled economic commentators false prophets whose whose poor predictions could make people worse off. What do you make of this, Sean?
People in glass houses, perhaps? The central bank is definitely better known for being conservative. It's only been a few months that the governor has even been giving press conferences. Now Mr. Hauser has come out. Yesterday he was talking to an Economic Society of Australia event, and he said a vibrant public economic debate with diverse views is healthy. Fair enough. What's less desirable is the extraordinary certainty with which individual views about the outlook for the economy and the path of monetary policy can sometimes be expressed. He doesn't like people's opinion, I think he's saying there. He went on to say economic commentators had created, and I quote, a world of winners and losers, gurus and charlatans, geniuses and buffoons. Those seeing things differently are castigated as incompetent, biased, or on the make, and changes in view are presented as disastrous or humiliating failures. End quote. He said commentators claiming supreme confidence or certainty over what is an intrinsically uncertain and ambiguous outlook is a dangerous game, and at worst risks driving poor analysis and decision making that could harm the welfare of all Australians. Go get him, Housey.
God, he didn't miss, did he? do you reckon he was just walking in and he goes, you know what? I'm going to go off script today. I'm going to liven things up. Let's see if we can get a rise out of these guys. And that's what he came up with. That is a fantastic take. Oh, I love it. Bit of theatre. Now, meanwhile, federal parliament, Sean, is back, and whether the Albanese government is helping or hindering rate cuts is going to play out in the run-up to the next election.
The election must be held by May next year, and yesterday Prime Minister Anthony Albanese maintained that Labor is helping the Reserve Bank in its fight against price pressures. He added that inflation has halved since Labor came into office. He also defended his government's cost of living plans while criticising the coalition's own economic credentials. Treasurer Jim Chalmers, he accused opposition Treasury spokesperson Angus Taylor of desperately wanting inflation and interest rates to push higher for his own political advantage. I reckon we're going to hear a lot about this stuff in the next few months, Michael.
I suspect you might be right, Sean. Now, rail haulage group Aurizon has announced a 25% jump in annual net profit and will spend $150 million buying back shares.
But Aurizon didn't meet its growth target for the network and coal businesses, and the result was below expectations. As a result, its share price tumbled 9%. While the coal business did pretty well, the consumer goods transport business isn't as successful, with Chief Executive Andrew Harding saying the containerised freight market is softer than industry expected. He blamed inflation and higher interest rates. Aurizon has primarily been a coal haulage company, but is pushing into soft goods, particularly along the East Coast. The share price is off 14% this year.
Trade unions are making inroads into the big miners, with BHP being forced to the negotiating table and Rio Tinto under a little bit of pressure to do the same.
Yes, the BHP will need to negotiate under recent industrial relations changes introduced by Labor, despite assurances that the laws wouldn't affect the sector, according to a report in the Fin Review. The move has already drawn the ire of the Minerals Council, whose chief executive, Tanya Constable, said it was the start of a union power grab. Now, before the changes were introduced, unions would have had to establish that they represented most workers before BHP or Rio were forced to negotiate with them. Brad Gandy, the Australian Workers' Union State Secretary, said wages and conditions for iron ore miners are not as good as many people thought. Now, government agency Jobs and Skills Australia estimates that the median wage in the mining industry, not iron ore, but mining industry, is $2,452 per week. That's about 60% higher than the overall median across the economy.
Okay, turning to international news now. Foreign investors pulled a record amount of money from China last quarter, likely reflecting deep pessimism about the world's second largest economy.
So China's direct investment liabilities in its balance of payments, that's the official title, that's where we're getting the figure from, dropped by almost $15 billion in the 3 months to the end of June, marking only the second time this figure has turned negative. It was actually down about $5 billion for the previous 3 months. If it continues for the year, it would be the first annual net outflow since at least 1990, when data began being collected. We've heard lots of stories about foreign investors pulling out of China and putting it into other regional assets, i.e. Commonwealth Bank shares. There's been talk that's why Commonwealth Bank has gone so hard. overseas people not wanting to invest in China, wanting to invest in Commonwealth Bank. These numbers we're seeing yesterday is kind of the first half of that story. The fall comes despite Beijing's growing efforts to attract and retain foreign investment. Now, according to Bloomberg, the government wants to show it remains open and attractive to foreign businesses in the hope that companies will bring advanced technologies and resist pressure from the US and elsewhere to decouple from China.
The US is upping its presence in the Middle East ahead of an anticipated Iranian attack on Israel and is sending a guided missile submarine to the area.
According to a readout from a call between US Defense Secretary Lloyd Austin and Israeli Defense Minister Yoav Gallant, Austin accelerated the timeline for the arrival of the USS Abraham Lincoln, an aircraft carrier with F-35s that was meant to replace the outgoing USS Theodore Roosevelt. However, both ships will now be there together. Austin also discussed Israel's efforts to avoid civilian harm after an Israeli attack on a school killed at least 80 people. Israel said the school was being used as a Hamas command and control centre.
Last one, Sean, something a little bit lighter here to finish on. I'll be keen for your thoughts on it. The one-day work flight, where you get up early in the morning, fly to a destination and then return home late at night, is out of fashion, it seems, with companies dumping the practice post-COVID.
Yeah, so the new normal in corporate travel has changed, according to the boss of the global industry trade body. The one-day flight trip for work went out the door at the beginning of COVID and hasn't really come back, according to Suzanne Nefang, head of the Global Business Travel Association. Delays and cancelled flights are partly responsible for fewer trips since the pandemic, with 50% of respondents to a 2023 survey saying concerns about disruptions or an unpleasant experience have somewhat or greatly reduced their willingness to travel for work. Now, according to the Financial Times, environmental and sustainable factors have also played a part as corporates are trying to limit flying, packing more meetings into fewer trips, or only taking a plane for long journeys. So there's a bunch of companies out there like PwC, EY, Marsh McLennan. They've all outlined plans to cut emissions by reducing air travel, for example. Also, the Fang adds there's a bit of human element. You know, day trips are really hard no matter what. Even on the best days, they are hard. Very early starts and late returns. Couldn't agree more, Suzanne.
Oh, so this is actually, when I first heard this story, I thought it was essentially saying that, hey, we're just going to ease it out. Kind of, you can head down the night before and stay the night or stay a couple of nights. But really, it's actually an overall cut back in corporate travel in general.
So it's interesting. Corporate travel numbers are definitely lower, and they don't expect the number of corporate travelers to catch up to pre-COVID numbers until late this decade, like 28, 29. However, the cost of corporate travel has risen significantly. So it's not necessarily less profitable for the airlines.
Okay. Interesting story. Up next, Sean, is the Fear and Greed Daily Interview. Your guest today, Nicola Powell from Domain.
All about the upcoming spring selling season and just the fact that it's just taking longer for sellers to sell, which means it might actually be a better buyer's market this season.
It is coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is where you can sign up for our Fear and Greed free weekly newsletter out tomorrow. And keep an eye on your playlist today at midday for the next bonus episode of Ask Fear and Greed, where we tackle listener questions. And you can also submit your questions if you'd like us to get to that one. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 13th of August, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.